This is Eric Miskell with EMS Now, and welcome to this edition of EMS Now Up Close. It's my pleasure today to be speaking again with Rainer Koppitz, the CEO and co-founder of the Katek Group. Katek, of course, is a German-based EMS company. I'll let Rainer give all of the details on it here in just a moment when he introduces it, but just for sizing purposes, as I understand it, 2020 was just over 400 million in revenues, which ranked you as the second largest German-based EMS, and I believe the sixth largest European-based EMS company currently. So you're nodding, so I must have gotten those numbers correct. So thank you. Rainer, again, pleasure to speak with you. As always, why don't we begin? I have a lot of issues I wanted to cover with you today, but let's begin by allowing you to introduce yourself and Katek Group for the audience.
Yeah, super. So my name is Rainer Koppitz. I'm the CEO and co-founder of Katek since January 2019. I'm 52 years old, married, already one daughter, and even one grandson. That's always interesting to know. So yes. I started very early in this family kind of business. I worked many years in management positions for Siemens, for Dell, for British Telecom. I was acting as CEO for Enphone 2012 to 15. I'm still the head of the supervisory board of this company. We brought this to an IPO in 2018. And now for the last 2.5 years almost, I had the honor to lead Katek SE Group. And also do an IPO now, 2 weeks ago. So that's basically, where we stand. What is Katek? You rightly said Katek is, I would say, the second largest German electronics company, sixth largest in Europe. I don't say EMS because I think EMS is for many, at least in Europe, it's a little bit kind of misleading because everybody thinks you're only doing production, which is by far not the profile of the most successful electronics companies. What we for sure can claim is that we are maybe the fastest growing European electronics company, as we moved up the ranks within 1 year from number 18 to number 6, so 12 ranks. But that's not, let me say, growth for the sake of growth. It's more what we are building there, but I'm sure that's something which we will cover later in the discussion, Eric. And thank you very much again for the invitation. I always appreciate to get a little bit challenged, by you.
Yeah, no, and thank you, and congratulations on being an Opa. That's the best title in the world. I have the same now too. So you mentioned the IPO, and it was interesting as you were talking that you had done an IPO in 2018 as well with a previous company, or taken them to an IPO. So you did 2 weeks ago. You just did an IPO with Katek Group. So congratulations on that.
Thank you.
Some questions. So why did you choose to do the IPO that route, and why now with so much going on in the industry and even at this stage of Katek's life cycle?
Yeah, basically, the reason is that we absolutely believe that this market globally, but especially in Europe, is totally mature for a huge consolidation. This consolidation, we can cover this later a little bit more in detail, is really going on. It's starting right now. So we from January 19 until today, we've acquired additional 7 companies. And we've we funded this strong inorganic growth by some kind of, let me say, loans from our largest shareholder, and then later always we converted it into equity. And if we want, and we've got to this size, those 440 million euro in revenues, much faster than we originally expected. So in order to continue this very, very fast growth, but to do this in a very solid way, which, you know, the market and especially the customers and the suppliers are expecting, you know, we need to get access to a, let me say, broader equity, you know, base and market. And I mean, there, the natural thing to do is an IPO. And we had plenty of discussions with banks in Europe in order about options, about alternatives, etc. Of course, there were, you know, some very, very large private equity companies which, you know, would have liked to, you know, come in. But that's not the way we want to. That's not the way we want to go. So we really decided, in order to do this, to get access to a broader equity base and you know, being able to continue this very, very strong growth. And it's not only the inorganic growth; it's also the organic growth. I mean, we've been growing for almost 60% now 2 years in a row. So 59% from 19 to 20. And again, you know, 59% the year before. So this was really, I mean, great growth. In order to continue this growth, it's not only necessary to, you know, acquire additional companies, it's also necessary to, let me say, fuel the growth of the existing companies which we have, especially as some of them are in super growth markets.
Okay. So, and it's interesting because with the IPO, if I have this calculated correctly, represents about a 30% free float of shares. So, you know, was that what you expect? Do you expect that potentially to increase in the next year or so? Or?
Yeah, I mean, that's always, I mean, what we did basically is we did a 35% capital increase. And I mean, in addition, you know, a smaller green shoe, because I think the demand, you know, for the shares was, you know, tremendous. So we decided also to, you know, fully exploit the green shoe. But basically, this was the 35% of a capital increase. And I mean, the issue is that's basically the money which we need now for the next, let me say, you know, year or year and a half. It depends a little bit from the availability of the targets in the market. I mean, that's enough. So and nobody sold any shares. I mean, not the management, not Prime Pulse as the major shareholder. Of course, there was a little bit in the green shoe by the second largest investors, but basically it was a sheer capital increase. All the money is going into the company. So to do, let me say, even larger IPO in order to, or larger capital increase in order to increase the free flow, this was something which we were discussing, but it doesn't make sense. You should only go, you know, get so much money into the company as you really need for the next, let me say, 12 to 18 months and not more. So that's the reason. So, but coming back to your question, I'm 100% sure that over the next couple of years, the free float will further grow, because I mean, the path is very clear. We will continue this growth path for the next, let me say, decades, and the right way to fund this growth, you know, is now capital increase and will be capital increase in future.
Okay, good. And I remember during your IPO announcement, you set a growth milestone, or the next growth milestone, as being €500 million, so 500 million euros. So let's talk about that, because you just mentioned too that the IPO is intended to fuel both the organic and inorganic. So expound on that, if you would, please. Tell me where, you know, obviously people think of IPO, you're getting your war chest ready to go out and do acquisitions, but you're also obviously growing your current business as well. So how do you see that playing out?
Yeah. I would put this like this. If I just look into the organic growth, which we, you know, are, you know, supposed to do this year, and I mean, I already can have a look. I cannot say too much details, but I can already look, you know, into the first quarter, and I mean, the first quarter gives me a, let me say, very, very solid indication that, you know, 500 million and even maybe a little bit more is absolutely doable this fiscal year without any further acquisition. So just the companies which we have, you know, today in the Katek group. So that's the first. I have a very, very strong indication that we will get there. Of course, we have you know, the material shortage and all those kind of things. You know, nobody knows everything, but I mean, I have strong indications that it's doable. Okay, I'm also pretty sure that over the course of the next 12 to 18 months, you know, we will do 1 or 2 additional acquisitions. And I mean, we are, you know, talking with a lot of companies. We have a lot of inbound interest from, you know, family-led companies in interesting electronics areas. I mean, at the end of the day, there must be a cultural fit. There must be a, you know, fit content-wise, and of course also the pricing has to be the right one. There's a tendency right now that all the prices are going up in our industry. So if so, I mean, I easily also can wait for 12 or 18 months. There's no need to buy something. We are not in a hurry. Okay. I mean, but we have some things in the pipeline which are, I would say, quite promising. With regards to fueling the organic growth, we have to imagine that we are in some areas active, which I would describe as land grabbing mode markets. Meaning, if you look into the you know, solar energy or solar home storage system, something where we are, you know, pretty much in with all of our kind of electronics we are delivering into this market. That's a very, very interesting area due to all the you know, green deals in Europe, but you know, also you know, outside from Europe. There will be a massive push of those you know, kind of markets to the renewables energy. So the strong growth we are already experiencing in this segment right now, this will continue, but in order to take part in this growth over proportional, you have to invest now into sales, into channels, into additional engineering capacities. That's something we definitely need to do, will to do, and want to do. And you know, that's one thing. The second one is the e-mobility charging part. There's also something where we are very, very active, and I mean, we already have, I mean, some really, really good ideas in order to further take, you know, part in this really dynamic market. And of course, I can imagine to buy additional companies in this area, but they are extremely expensive. So maybe it's much smarter to build on what we already have. We have a brilliant engineering teams. We have lighthouse customers. The number one customer in the automotive industry is, I mean, a lighthouse customer of ours. So we can build on this, leverage this, can do reuse, and can, I mean, push the organic growth within this area should be much, you know, more efficient and cheaper than buying additional companies in this kind of overheated area. And the third, you know, I would say, market in land grabbing mode, there is maybe what we call telecare. Which is I mean, which is based on the mega trend of the aging society, where you can you know, enable elderly people to you know, have a self-determined life and not going to a home for elderly peoples, because you have the right hardware and software in place with kind of alarm buttons, triple connectivity, etc. This is something where we are really, really successful. And now, of course, we are market leaders in the Netherlands and Germany, other countries, and we now want to expand to the UK and other countries with an aging society as well. So those are, you know, just 3 examples where I say, you know, unlikely, like, you know, many other players in the market, it's not megatrend markets where we think, it should be a good idea to go into this, to enter into this market. We are already in. We have reference customers, we have products. I mean, we have everything in place. So we just need to fuel it, which could be much more economic than just buying the next company.
Yeah. And you mentioned that, you know, not needing to grow just for growth's sake, because part of it is also, and always a challenge within EMS is making sure it's profitable, right? The business that you're doing, right? Everybody focuses on that top end, but at the end of the day, it's the bottom end that keeps you in business. So how do you manage that in the process? How do you view that?
Yeah. So we deeply believe that you can grow very fast, but I mean, not burning money. And I think this was also maybe the main reason why the demand for the Katek shares was so strong, was so high, because it was the combination of a really, let me say, solid EBIT, EBITDA, and cash positive company with a stable customer base of more than 650 customers with a very high loyalty. So very, very stable, very solid. And on the other side, the opportunity to take part in some of the mega growth areas like e-mobility, renewables, and aging society, and some more. So this is a combination which you rarely find in the market. Normally, you have to decide whether you invest into high growth, but I mean burning a lot of money, or you invest into some solid, boring kind of companies, slowly single-digit growth, EBITDA positive. Okay, super, but not really exciting. So this was the super sexy combination, I think, which created this big demand, and that's our conviction. We want to improve EBITDA, you know, year by year, but at the same time, we want to keep the strong growth and going, you know, double-digit growth, both in the inorganic and in the organic area, so that we, I mean, are further winning market shares. And market shares, I mean, that's also not market shares for the sake of market shares, but it means that you have the visibility, you know, to the top projects, the top customers on one side, and that you have the purchasing power in order to deal with the supplier landscape, which especially now plays out during the material crisis, because I mean, in doubt, you are getting the material because everybody wants to be your partner also for the next years. I mean, that's a unbelievable big advantage.
So one more question on growth before we move forward, and that has to do, and we spoke about this once before, growth is premised on OEMs outsourcing and giving you business, obviously. That's what it all comes to. So, and before you were very optimistic about the European OEMs outsourcing more. So speak to that, you know, is that still your view that will be happening more and that's what's fueling a lot of this?
Yeah, I mean, there's, it's my deep conviction, and you know, all the talks which, you know, we are having right now with customers about this and prospects about this is, I mean, the demand to find smart outsourcers here is in Europe is really huge, is really huge, and that everybody is prepared to discuss outsourcing, business process outsourcing. And I mean, you can see in all the other industries. I mean, you can see it in IT, you can see it for accounting, you can see it, I mean, almost everywhere. Everybody is open to the outsourcing of non-core activities. I mean, that's a given fact. Now you can ask, why is it not happening in the electronics industry to a broader, you know, extent right now? And the reason is because electronics is the heart of everything in the industry. So even if you understand that it makes sense to outsource, I mean, it's something where, I mean, you are dead. I mean, IT is a supporting process, but the electronics is the heart of what all of our customers are selling. So what you really need is a 100% stable and trustworthy long-term partner here, someone who's there to stay, where you can, where you have, you know, where we are trust into the management, and I mean, where you see, you know, more partnership rather than, you know, kind of a supplier customer kind of relationship. And if you then look into the European markets with, you know, companies with decent size, but absolutely transparent in numbers, no economic problems, no dependencies from some large customers, etc., etc. I mean, and by the way, the willingness to do outsourcing. There are many, stable EMS electronics companies, which I would say would meet many of those criteria, but they are just not used to do outsourcing. They never did it, and they don't have the ability, and they don't want it. So, and then the number of companies, which then really can offer outsourcing and they can manage outsourcing is very, 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 very small. And this was exactly the case in the IT industry some kind of 40 years ago as well, unless an IBM, an HP, and DEC decided to enter into this market. And that's something which, we are now trying to start in order to say, we are here, we want to do it. And I'm pretty sure, like in the M&A arena, that, many others will follow. But now we have to create, we have to make the market. And I think we are in a good way.
Okay, good. I want to keep moving forward here. I could keep going on that one for a bit. That's a big topic.
Yeah, it is.
I want to talk about your kind of what differentiates Katek. And what's impressed me, I remember interviewing you, I think it was 2 years ago, and you invoked this image of the speedboats, right?
Yeah.
And when I think of Katek, I think of your management and your structure as kind of having, as you call them, the speedboats, your acquisitions that you come. But your job is to let them be nimble and remain speedboats in the market, but yet maintain kind of some centralized functioning within that. Is that still how it is? Is that you see that staying that way moving forward?
Exactly. So, I think one of the characteristics of a good strategy is that you don't have to change it every year. And that's clearly also true for our speedboat strategy. It's exactly the way how you described it. All the let me say 7 acquisitions we did through the last 2.5 years. In addition, the 2 acquisitions which happened even before, which was the foundation, so let me say the platform of the entire Katek story, the Steka and the electronics part of the Katrine group before. Those were the platform before January 19. On the basis of this platform, we founded Katek, and then we acquired those 7 more companies. And all of them are part of this speedboat fleet, and going through the ocean. But all have different roles, different management, but they are going into the same direction under the blue flag. So that's still how we do it. But we also know that there are some synergies which you have to realize in order to make this all meaningful, which is sales, which is purchasing, which is finance, which is operations, and some overlying general programs. And of course, there are 6-7 people on group level. It's still not more, by the way, and they are coordinating everything on group level. But even and it's by purpose, it's just a small group of people, because this small group of people, including myself, I don't have the timing in order to discuss about, let me say, we are all using the same gardener, in all the locations, and that everybody has the same T-shirt. All this, headquarters bullshit, which is, happening in all larger companies. Yeah. Group level, in our company, nobody has the time to waste money for such kind of bullshit. And that's the philosophy, and that's working pretty well, I would say.
Yeah. That's a good philosophy. Minimize the bullshit. I like that.
Yeah.
So, let me talk about your footprint. You define Katek as a European player, mostly with facilities in Germany and Eastern Europe, but inevitably that's changing, is it not? I think the IPO, it mentioned Malaysia as an example. Yeah. So speak to that and how the growth might change that.
Yeah. So if I look, if just, I look where we stand today, there are a lot of locations for engineering, for production, for whatever, prototyping in Germany. We have 3 locations, and by the way, we are still investing into those locations. Not that, I mean, there's a secret strategy to bring everything to Eastern Europe first and then to Asia. We don't believe into this. We just decided to further invest in Mauerstetten, where we do all the embedded business, for instance. Last year, we finalized, kind of a big additional building in Grassau in Bavaria. So it's not that we are not investing into those locations as well. But as well, we are investing into Bulgaria, one of our Eastern Europe companies, where we will double the space and double the capacity, because we think that will be kind of a Eastern European hub, extremely important. You have factor costs which are absolutely comparable to China, for instance. And then in the meanwhile, we have, due to the acquisition of Leasys Leipzig and Telealarm, we have also offices in Switzerland, in the Netherlands, and also in Lithuania. And as you rightly mentioned, we also decided to go to Singapore and Malaysia. Singapore, this will be sheer office, kind of sales office for prototyping and the purchasing office, which has already, opened. And in Malaysia, we will build, and we are already about to build, so it's just, it's already under construction. We build a prototyping center and a small batch, kind of manufacturing, especially to serve European customers, which have also a need for their local demand there, and in order to serve R&D departments of European customers, which are in those regions there, Singapore, Hong Kong, Malaysia, to serve them with prototyping capabilities like we do in Europe. So that's basically the footprint as we have it today. And I, of course, can imagine, and what we will see is that we also will go into some other European markets, especially as we know that in markets like France, for instance, or Italy or UK, the same truth is valid like we have it in Germany, that in many industries like healthcare, for instance, you need, let me say, the local touch, you need the same language, you need that, I mean, you can directly come to the engineering team, to the manufacturing side, to the prototyping side. I mean, you cannot just go and say, I win some deals in France from Germany. That's not going to work. So that's something which we will see in future as well. But we won't do this by, establishing their kind of a sales office or a small kind of manufacturing. I mean, we are looking for meaningful targets in those regions midterm as well, in order to go there and to be really the real European player, as you mentioned, Eric.
Okay, good. Well, I don't know if you can respond to this or not, but I'll just put in my pitch that if you ever decide to come over the pond into the United States, Texas is a wonderful location. We're centrally located and friendly people. So
yeah. Absolutely. I love Texas. I mean, during my time when I worked for Dell, I was one of only 2 European executives directly reporting into the Texas headquarters, and I, spent many times there, and I really liked it. I really liked it.
We'll move on from that.
And I like the steak there.
There you go. We do have quite a bit of that here. So
yeah, I know.
So I want to talk about service offerings real quick, because part of and not just this, I know that Katek is capable of the full kind of traditional EMS services, from PCBA, box build, all the front end stuff, design, and the aftermarket and all that. But it looks like you're also expanding into some non-traditional areas, right? Which would be considered non-traditional. You mentioned there the prototyping service. I think that's Bflex. So let's start with maybe that one. That was an acquisition that you did, and it added, and I used to work in a rapid prototype shop myself, and worked in one for years. So that's a different beast than normal manufacturing, right? And so what are the opportunities you see there? Obviously, you have clients, European clients, needing that closer into the Asian community, which underlies Malaysia. So speak to that, if you would.
Look, Eric, the logic why we put together this set of 7 + 2, so those 9 companies, was, I mean, it had 2 reasons. First of all, coming very quickly to a decent size in order to have access to the suppliers and the customers. And the second one was to, as fast as possible, cover all the most important steps of the value chain. And prototyping is one of the most interesting ones. So that's why we decided to acquire Bflex. So why? I mean, theoretically, right now, because we are covering all steps in the value chain are potential entry points for any customer. So one customer wants to do co-development, the other one electronics manufacturing, the other one final assembly, whatever. So you can enter into the Katek system wherever you want, because we can do everything. But from there, we then can take it with by doing upselling and cross-selling, and so kind of monopolize the customer interface. Become from a supplier to a partner, and also increase the margins then at the same point of time. So that's basically the system. There are 3 typical entry points. The first one is engineering, hardware, software engineering. I mean, that's a typical entry point like we did normally in the solar renewable industry. This was a typical entry point for the mobile chargers, which we do with Volkswagen. That's very interesting, and we will further strengthen this. The other typical and equally interesting entry point is this rapid prototyping. So why? Because you are working together with the R&D department on a project, from which your competitor doesn't even know that it exists at this point of time. So everything. You help the developers to do the design to manufacture, the design to cost. You have a very intimate kind of relationship. You get access to the decision makers. I mean, and you have all the trust that you are maybe the right one also to get this into serial production, to help them in the development, to do the final assembly, whatever. I mean, that doesn't necessarily mean that every prototyping project we are aiming to bring this to a broader basis. But of course, I mean, we can pick out the most interesting one. And some of our most interesting customers today, especially, by the way, in the healthcare industry, they started with rapid prototyping. And from there, I mean, we took them. So very, very interesting entry point. But I mean, there's there's something you have to bring, and first of all, that's I mean, technological competence, because those projects are, in terms of miniaturization and whatever, they are sometimes 2 to 3 years ahead of the rest of the market. So you really have to bring technological expertise. And secondly, you need to be close to the customer. So that's why we have those prototyping centers, not one in Germany, I mean, to serve them all. We have one in Bavaria, we have one in North Rhine-Westphalia, we have one in Baden-Württemberg, we established one this year in Hamburg, we will establish one this year in Leipzig for Silicon Saxony, and now one in Malaysia, and we are exploiting others, like, for instance, Israel. So that's the logic behind. And the beauty here is, first, it's a strategic weapon and door opener for all kind of electronics projects. Secondly, you learn a lot, and it's kind of the technological, let me say, driver of the entire company, because they see, what happens in 2 to 3 years. And then thirdly, it's a very, very nice double-digit EBITDA business as such, because it's technological competence and it's speed which counts, and not the price.
Yep. Hey, the other one I wanted to ask you about was Telealarm, which is actually an OEM that, and you can tell the story on that, but it's also promoted as a Katek brand. So that's not obviously non-traditional EMS services. That's an actual that you tell us about that. And is that Is there more of that in the future potentially?
Yeah, I think so, and we regard E-Systems, the e-mobility part, which we are doing, the former Stecker, but it's still a product brand in the renewable solar storage system, and Tele-Alarm. It's kind of, I mean, for us in our eyes, it's kind of parts of the same strategy. So what's the strategy behind? We see the large electronics engineering and manufacturing market. I mean, that's the market Dieter Weiss and the others are talking all about. And 2/3 of this is still the captive market, which is mature for outsourcing. Okay, so that's the, let me say, traditional market where we are growing, which we love, and I mean we are there to side. Then we see a much bigger market which is surrounding this electronics engineering manufacturing market, and that's the market for, I mean, complete devices, systems, solutions based on electronics. So based basically on EMS. So what we say is, and what we see is, because we have all the size and all this know-how in electronics, we can use this in very selective areas to go into this broader market, but not in order to, let me say, win some market shares and go there by pricing, but we selectively go into this part of the market only in mega growth areas, where it's not just you are fighting for market shares, but if you are in this market and you have the right system solution products, I mean, you have automatic fast growth. And that's the case in the renewables area, in the aging society market. That's why Tele-Alarm makes sense. That makes sense in the e-mobility market, and we are seeing some others, like for instance smart agriculture and others, where we are looking to enter into it at some point of time. So that's so the would E-Systems in the e-mobility sector or Tele-Alarm, could they be successful without, let me say, all the roots in the electronics? And we are manufacturing this all on our own. We are doing this. We are developing all. Of course not, because we have the advantages of the size of the brand, of the stability of the management team. But based on all of this, we enter into some of those markets. This was, one of the most intense discussions I had with investors during the IPO. Because if an investor was asking and saying, wouldn't it be a good idea to just split off all the rest of it, this electronics, engineering, manufacturing, blah, 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 and just concentrate of, e-mobility, and said, yeah, it's maybe a good strategy, but then we are the wrong company for you to invest into, because that's not our strategy. Because we are successful in those markets, because we have, everything, the full machinery available, which comes from the, let me say, kind of underlying electronics business, and that's the strategy. It's kind of integrated. It's not separated business. So for us, it doesn't make sense, because this gives us real competitive advantages in terms of cost, in terms of speed, in terms of technological expertise.
Okay, excellent. I want to change from the focus on Katek to speak to you about more industry trends and issues in the industry.